Today is Sunday, April 2nd, 2023, back for a market outlook. And tonight I'm also going to discuss higher time frame bias and how I like to use the monthly, weekly, and daily charts to have a picture in mind for what I can expect in the upcoming week or the upcoming day or the upcoming month. This isn't going to be like a video with a ton of examples. It's really just going to look at what's going on right now in the market, what happened last month, what we can maybe expect for the upcoming month. And you can see right here, I have this level drawn out that I've had from the last video I did, first or second week of March. I did a monthly review where I thought that we were likely to come down and take out these monthly lows right here, these candle lows here from November, December, and January. But I also said that there was a chance, even though I thought it was lower probability, that if we break below this low and see kind of a swift reclaim back up, that would effectively make this a liquidity grab, an area that's trapping a lot of traders on the wrong side, which I think is what is possibly happening right now. Market had been bearish, had this higher time frame resistance area around 4,200 area where you can see how the bodies were respecting this. Every time we got a price traded above this area, it got swiftly rejected. For months this was happening, and we had kind of this ceiling right here. And then on February, price rejected it once again. And then what happened in March is, in the early part of the month, it traded down below this low. So I wanted to see how was price behaving on the lower time frames, meaning the daily, the weekly, etc., relative to the monthly, to see if it was validating the thesis that we were bearish, or was it disproving that thesis? And was it showing signs and evidence that actually were bullish? And so again, it's not about guessing right and knowing what it's going to do, in my opinion. It's about having a way of reading the candlesticks as they're forming to, as you get new information, revise your plan, update your plan, see how the lower time frame is affecting the candle on the higher time frame. And it's about when you see a setup on a lower time frame, because you've read the higher time frame in a way that makes sense to you, then it becomes a lot more effortless to trade. It becomes a lot more natural to see it and want to take it and not hesitate and not overthink it. So anyway, how could we have looked at this and seen evidence early on that this was not likely to hit these lows? You can see we hit January, and then in hindsight can see close back up in the range. But what could we have seen before we got this close to know that we were not likely to come and hit these lows? Well, in my view, if we go to the daily chart, in March, I was actually thinking we were going to go lower because we saw this displacement through this low. We had shown a little support here, a little bounce, come up, hit this resistance area, this imbalance. We sold off, creating a new gap through the level, through the monthly low. And so it made sense while we were below this level to be bearish down to these lows, in my opinion. You can see that there was a move off of this area. Didn't go down here, but on a lower time frame, there was a trade from roughly this area, which is a retracement from, let's say, this high to this low, around the 70%, 62, 70%, in line with this gap. There was a move, there was a reaction there. But if we're actually looking closely at what the daily candles are doing relative to this monthly level, you could see early signs that we were more likely to move higher. Not necessarily to say we were going to go and take this high and go all the way up here necessarily, but know that there's a chance that we're going to at least see a deeper retracement. So what was that clue? Well, first let's start by looking at this price leg down from this high to this low. And we look up that we had this swing high right here. So we have this swing high where we have a high on Friday, March 3rd, and then a higher high on Monday, March 6th. And then on Tuesday, we get a very impulsive close below the middle candle's low. When I do another video on bias, like an actual video, this will be one of the points that that I talk about you have this impulsive move, not just an impulsive. So it's this three bar pattern where we close below the middle candle, but it's not just that. It's also that this has occurred at a logical level where we would expect to see resistance. So this daily imbalance, we form this swing high, we're pushing away off of it. And so we can expect to see lower prices, which is what followed up after that. Now I want to compare that to what happened when we hit this logical area. This logical area of the low of February combined with this retracement level combined with this imbalance in a bearish environment, it would make sense to see a reaction that might go lower until you see evidence otherwise. Well, what's the evidence otherwise? It's literally the same thing. It's the failure to do this. It's the failure to do this. So here we reacted off the logical level, formed the swing high, closed impulsively through the low of the middle candle. Here we form a high, and it is a swing high because there's lower highs on either day. But what did we do relative to this middle candle's low? We tried to go lower. At one point in time during the day, this looked like a very bearish day. But what happened was, whether you want to say buyers stepped in or sellers got weak or whatever you want to say, however you want to look at it, the fact of the matter is, the absolute fact is that the daily candle closed up here. Tried to go lower, got rejected back into the range of Friday. So that was the first clue that price was likely to go higher and not lower. Not necessarily new highs, but maybe just to a deeper retracement area. And the next day went higher. And then look how the same type of phenomenon happened here. So we come into another logical area. We take out this swing high into an imbalance, into a deeper retracement now from this high to this low. So now we rejected off of the 79%, showed rejection, and then you can mark out the low of the middle candle. And then on Thursday the 23rd, price did go lower again, got rejected back in the range, but not as convincing, let's say, as it did as it rejected back into the range on the 20th. Here it went down, very nice rejection back up, closing near the high. Here, yes, it rejected, it couldn't close below, but I wouldn't call that a very inspiring close if you're bullish. But the following day, tried to go lower to the 23rd, and this time we get a much more dynamic close to the upside. Now we're closing above the monthly level, this February low. So you can see we get a close here, slightly above it, a rejection, fail to go lower, pushes up higher, much more nicer close above February's low. Then we go higher, get rejected back down. Not as much of a rejection back below, but we still hold below it until here, fail to go below it and come back up, strong close back above. So this should be, so now we have what, 1, 2, 3 clues, more or less, based on the daily chart that we are going to go higher. And now this isn't like something that allows you to, in my opinion, trade every day, because you don't know what's going to happen on a lot of these days, obviously, and I found a lot of this to be pretty untradeable for me. Now, this would have been a trade. I think I took a trade on Dow. I can't remember. Maybe it was here. I know for a fact that I took a trade on Dow. Same sort of situation. Maybe it was on this day after the rejection. I can't recall. I think Wednesday was FOMC. So yeah, like there's still bearish moves to be had, obviously, you're getting, this is a good range from this high to this low. There's a short that you could have had on this day. That's not to say you have to go short or long or whatever, but this is pretty choppy, but at least you can start to see that the bearish view is becoming less likely. The bearish view of, hey, we're going lower, we're in a downtrend, we have these lows here that look likely to get hit on the monthly time frame. We're not seeing evidence on the daily chart as time goes on in March that that's becoming less and less likely. And it's becoming more and more likely that all the trading that's happening below this low of February is a liquidity grab. And notice here we come back up, and then on this day, Tuesday, we get a nice retest, and then here we get a very nice bullish close, and it becomes almost obvious at this point that we're moving higher. And to me, it's the same type of thing on NASDAQ. To me, the easiest, and you can see, you can have a similar view here where earlier in the month, I was thinking, okay, if we're going to show displacement below this low of February, we're going lower. We have this resistance. We have this very nice sell-off from February. And as long as we're showing a bearish price action below this level, I want to be bearish. But if we get a swift reaction back above, then it's a liquidity grab. And this took a while to play out, and it was kind of, again, I found a lot of days to just not be tradable. But we did have this imbalance right here on the weekly chart. It just becomes trickier to trade kind of in these rangy days. In fact, I remember taking a loss on this day, March 27th, I want to say, because I was bullish. Sorry, let's put it this way. This is a weekly imbalance. Price dips below the monthly low of February. Doesn't spend much time down here. Very nice swing low formed on the daily chart, closing above the middle candle. Logical area, taking the liquidity. We push up. Very nice closes. Form this gap. Price tries to break the low of this candle. Yes, it's a swing high. But what does it do when it tries to break below it? It gets rejected back up. This is a trap. It tries to close below the middle candle, fails to do so, pushes back up. Now we get another swing low where we closed above the middle candle on the daily chart. Oh yeah, we did hit this high here. So this is why, I don't want to say this is why, but we hit this high and then saw a period of consolidation. But periods of consolidation are not easy, for me at least. I don't like to force trades when we're in consolidation. And this is where I take most of my losses when I'm expecting price to continue trending. But again, we've hit this higher time frame level and we've rejected from it. But there was actually some wins here too, because there was a win here that I took off the low here Friday. There was a nice little trade. But oh yeah, I remember now. So this was we're still in this we were in this consolidation, but we're still bullish bias. And I'm pretty comfortable with this loss because we had this really nice gap here, and then at the open on so pretend we didn't see the sell-off yet. You know, the thing working against it was we technically had a structure break, kind of impulse move down, bearish leg right here that we're retracing, but we had this gap, and I remember buying, I don't know if I bought down there or, let's look at my notes. Right, that's right. I think I just bought this retracement. So to me, this was I felt comfortable taking this loss. I think that the warning signs were that didn't hit my target by 10:30, which is what I like to see for these opening range setups. And it was kind of hanging around. So at 10:15, it was right around my entry. And so this would have been a nice time to maybe half the position off. I don't know. Maybe it's just fine. Sometimes you just take the loss. So that was a loss. Even though I had the right bias overall, but price was in a consolidation. But once we had this move below these lows here, again, you could kind of look at it the same kind of phenomenon. We have this swing high from the Wednesday the 22nd, and we can't even make the attempt to close below the low of the middle candle being the swing high. And the first time it goes below it, it rejects it. So this is such a bullish sign, especially when it follows with this. It's just like, again, I hope that my point is kind of clear. Like, watching these higher time frame swing points and the middle candle and whether we get the close below or above is so useful. Now, unfortunately, NASDAQ did not cooperate. And once it came, I wanted to buy after it started turning around here, but it didn't offer any retest, which is what it does sometimes. Well, this was actually not in the time where I'd be looking to trade, but so that was one thing. It kind of happened end of the day. And then on this day, there was a trade, but it didn't happen when I wanted to see it. So this was a little late. So I like to be in the position by about 9:45 or 10 a.m. or so. And so this came down, but it came down too late. So I pulled my order, and which maybe I should have a little bit more latitude for, but it comes down into this gap. It was just a fib retracement. But again, the bias is just so clear on this day that it just becomes so, it's just so much easier. It's like, why am I forcing things? Let's say, not forcing things, but I do spend probably too much time on certain days looking at the charts, looking for an opportunity, when really the smart thing to do is to just kind of be patient, let these daily candles print and show me evidence of where it wants to go. And then come to find Friday, it was like, in my opinion, this was like the easiest trade I've ever taken. I wouldn't say the easiest trade, but it's just such an easy, it's like, this is just easy when you get these types of opportunities. It's so clearly bullish bias. And then we have a type 1 liquidity grab. So we're making these lower lows. We take out this low. We also have this new day opening gap where price kind of works below it and then pushes up, displaces through it. Would I have loved this to close better? Yes, of course, but we still get this little imbalance right here. We have this order block right here, right at New York Open. Now, there was divergence too, with S&P making higher lows while this was making lower lows. And so to me, this was just like, okay, I'm bullish clearly for all the reasons I've mentioned. And I see a bullish setup. It's like at the time where I look to take my trades, except for it was like right at the open, which I didn't love. But to me, it was worth the risk because of just how bullish we were and how price was not coming back, not giving deep retracements on NASDAQ. So this was just a very right at the open. It wicked down. So I didn't have a limit order. I just saw it kind of go down. And then once I saw it pushing back up on the 1 minute chart, it was literally the first minute of the open. It came down. And then as it was coming back up, I bought. And my target was basically, actually I have to go to the other, I think I have to go to the continuous contract. It was this high. 13.2. So my target, I think it was like 4 to 1 or something like that. What was it? So it was like something like this. Exactly, like 4R. And it was just, I mean, on these days, it's like there's just no heat. There's like no pullbacks. It's like very stress-free. And so that's what the importance of having a bias is, and kind of waiting until we have clear evidence of what it wants to do. And I think for me, it's understanding too, like once we take out this high, there's a chance we're going to go sideways for a little bit. And that's what happened here. But again, in terms of bias, your bias doesn't have to change, because if you look at, again, how are we behaving around the highs and lows, failing to close below, rejection, failing to even go to this low for 3 days. Moving ahead to the new week. So where do we stand? Now we've just had a very nice monthly close like this. Anything can happen, but it's hard it's hard for me not to expect some continuation higher. But I'm going to mark off the February high and see what price does if it trades down to that level. Again, on the weekly chart, we are making higher highs, closing above previous candles' highs. We're closing above the swing high. So I'm expecting, until proven otherwise, that a low of the week is likely to form somewhere, where it could form anywhere. But I know my first place where I'm going to look, at least based on the weekly chart, is last week's high, which is right around this previous month's high. So I don't have to even mark this level, but because it's so close, but you have this level right here. And if we go to the daily chart, where might the low of the day or the low of the week form? This is where I would start looking. We go onto the 4-hour chart. We do have this imbalance right here. So again, I don't know where it's going to stop, but I'm not expecting a reversal yet until I see evidence that that's going to happen. And that's why I don't want to trade every hour of the day. I just want to look at the key times that I trade and see what we get and make sure that it's clear on the daily chart. So where could we be going? So we know that these, the low of the week could be anywhere. It could come deeper. It could come into this volume imbalance. Who's to say? We don't really know. I would love for it to come back down here into this, but then it would be coming back down into this range, and it would look then, if it does it too soon, it could look just like a swift rejection. But again, it just looks way more likely that we're going to continue higher until we get to, maybe 13,800-ish. Let's go to the monthly really fast. Again, we have this whole wick. So we could just sort of fill this wick, or a good portion of this wick, and that would be a nice monthly target. So that's my bias at the start of the month. But, anything can happen. And this is how I'm going to start with my bias. And if I see things on the daily chart in terms of how we are closing, how are we coming into contact, how are we behaving around highs and lows of daily candles and new swing highs and lows that form, that will dictate whether I keep that bias or whether I become more flexible to saying, okay, well, actually, price is showing a path where it could be actually bearish. And similar to what I was showing, at the lows of S&P, if we start to see that at the highs, then we can again start to say, okay, maybe I'm not as bullish as I was at the beginning of the month, and that's okay. I don't have to say, oh, I'm really bullish right now, and then a week from now have to say, well, I was bullish a week ago, so I have to still justify that bullish narrative. No, it's like if you see, we'll have 5 more days of trading information to say, okay, are we still bullish? I don't know. Maybe, maybe not. So that's kind of how I look at bias, looking at the highs and lows of these higher time frame candles, and how price behaves around them on the lower time frame. This is just one example, and there'll be more in the future. Now, real quick, let's just take a look also at the Russell, just because I know someone was asking about it, and as it often is overlooked, I don't hear too many people talking about it. Now, it's not as dynamically bullish as the other indices. Let's actually zoom way out, because I never really look at this that much. So again, we had a swing point, swing high, we close below it, we come trade up into it, and we do get that little reaction. So this is on the yearly, so it's just showing that concept where we do get that close. We do usually get a rejection of it, But anyway, we've come back down into this kind of breaker area, and we've shown a little bit of a bounce on the 3-month. And then on the monthly, though, we're just in this sideways range. Fast forward to February and March, form this high, and we did close below this low. And we do have this imbalance up here. So again, this is much more bearish looking than NASDAQ, for example. But we have come down on a weekly level, taken this swing low right here, formed this swing low, closed above the candle. So that is a clue that we're probably likely to go up into filling this gap. The daily chart, we took out this low, broke above this high, nice close. But what do we get after that? We're right into this imbalance. So again, I don't see a clear, obvious, like this is a gotta buy it right now type of feeling from this. Nothing too much to excite me, just because on the monthly chart, we're not seeking, we're not doing this. We're not like clearly seeking higher prices. We're just sort of working this range. But the fact that we did close below February as opposed to S&P and NASDAQ, which would indicate to me that even if I'm bullish, it's like, why not long the ones that closed above February's low? Why not long the ones that kind of trapped traders below the level and has more fuel to go to the upside? So yeah, even though this might see a little bit of a rise, it's not like I don't see a lot of advantages to trading this. And of course, if we are bearish, if those other two turn, then this might be one of the better ones to short because it is a little bit weaker. And we have these equal lows right here. So if we do, let's say, come up into this area, retest this monthly, so we close below it. So we expect it to be resistance potentially when it comes back up into it. Some imbalance. So again, yeah, on the weekly chart, who's to say it comes back up? We could say a reversal back down. This could be the better one to short out of the other, out of all the indices. So that's it for today. Hope everyone's well, and I will be back again for another video soon. Take care, guys. Bye.